BlackRock did not just partner with Uniswap. They are buying the token. Let that sink in for a second. The largest asset manager in the world, responsible for $14 trillion in assets, is not just using the technology, they are holding the asset. But if you look at the price action today, you would think the project is dead. We saw a massive announcement, and the price barely moved. Actually, it dropped. It is the classic sell the news event that destroys retail investors. So, here's the question we need to answer today. Are we looking at a failing legacy project that is bleeding users to Solana? Or are we staring at the most undervalued infrastructure play in the entire crypto market? I'm looking at a specific level on the weekly chart. If we lose $2.70, this structure invalidates, and we are in trouble. But if this falling wedge plays out the way the institutional data suggests, the risk-to-reward ratio here is unlike anything else in the top 20. I'm going to show you exactly where I'm buying, where I'm placing my stop loss, and why the DeFi is dead narrative is the biggest trap of 2026. Let's be honest about the sentiment right now. It's brutal. If you have been holding Uniswap for the last 2 years, it has been a test of patience. We have seen liquidity fragmentation, we have seen the rise of Solana, and we have seen regulatory headwinds. The price has been stuck in a downtrend, chopping between $3 and $7. Most retail investors have already capitulated. They look at the chart, they see a slow bleed, and they move on to the shiny new object. But sophisticated investors look at something else. They look at market structure and valuation. Right now, Uniswap is trading at roughly $3. We are sitting on top of a multi-year support zone, but the market is fearful. The recent price action over the last 2 to 4 weeks has been weak, even with Bitcoin trying to find a bottom. However, there is a disconnect, a massive divergence between price and fundamental reality. While the price is making lower lows, the actual infrastructure, the plumbing of the financial system, is being rewired through this exact protocol. If you are only looking at the candles, you are missing the forest for the trees. The setup here is not about a quick flip. It's about positioning for a structural shift in how global assets are traded. Let's look at the hard data, because this is where the thesis gets interesting. We just got confirmation that BlackRock is bringing their tokenized treasury product, BUIDL, directly to Uniswap. This is not a drill. They are using Uniswap X for execution and Securitize for the issuance. Why does this matter? Because for the first time, we are moving from DeFi summer speculation to TradFi integration. We are talking about real-world assets. BlackRock manages $14 trillion. Even if just 0.1% of that flows on-chain, the volume implications for Uniswap are astronomical. And here is the detail most people missed in the headline. BlackRock is purchasing UNI tokens. They need them. Whether it's for governance alignment or future utility, the smartest money in the room is allocating to this asset while retail is selling it. But it's not just BlackRock. Robinhood, which brings millions of retail users, just launched their public testnet for the Robinhood chain. And guess what? It is designed to support tokenized assets, leveraging EVM standards. The pipelines are being built. Now, I have to be objective. It's not all bullish. We have to look at the competitive landscape. If you look at the recent volume data, Uniswap is still number 1 with roughly $60 million in 30-day fees. But look at who is behind them. PancakeSwap is close, and Pump Fund on Solana is generating $40 million. When we look at monthly active users, the picture is even more concerning. Uniswap has 3.6 million active users. PancakeSwap has 5.5 million. Radium has 3.7 million. This tells us clearly, retail is leaving Ethereum mainnet. They are going to Solana and Binance Smart Chain because it is cheaper and faster for gambling on meme coins. So, the retail casino thesis for Uniswap is weakening, but the institutional infrastructure thesis is exploding. Uniswap is pivoting to become the settlement layer for serious finance. They are launching UniRoute that delivers better prices on Unichain, where they already dominate 76% of swaps. They are launching auctions to capture MEV revenue, and their price-to-fees ratio is sitting at 2.2x. That is absurdly low for a protocol generating nearly $1 billion in annualized fees. The market is pricing Uniswap like a dying casino when it's actually becoming the New York Stock Exchange of on-chain finance. Now, let's get to the chart because fundamentals mean nothing if you buy at the wrong time. I'm looking at the weekly time frame. This gives us the signal, not the noise. Since 2024, price has been compressing inside a massive falling wedge structure. You can see the orange dotted lines on my chart. Typically, a falling wedge is a bullish reversal pattern. It represents exhaustion from sellers. However, we are right now sitting at the very bottom of this wedge, hovering around $3. This is what I call the do or die zone. Let's talk levels. Our immediate support is the previous bounce zone at $2.80. This is the line in the sand. Below that, we have a major liquidity gap down to $2 flat. That $2 level aligns with the 1618 Fibonacci extension, anchored from the lows of $4.75 back in 2024. On the upside, our resistance, and the level we need to reclaim to confirm a reversal, is $4.70. That was the last major support we lost. If we break back above that, we trigger a massive short squeeze. I'm also watching the Heikin-Ashi RSI. Look at the bottom of the chart. It's extremely oversold and pointing down. This confirms that momentum is currently bearish. There's no sugarcoating it. The trend is down until proven otherwise. But this is exactly where asymmetric opportunities are found. You don't get a risk-reward ratio like this when the RSI is overbought and everyone is celebrating on Twitter. You get it when everyone is terrified. The sell the news reaction to the BlackRock announcement created a bearish divergence that wiped out all the gains in 24 hours. That's painful, but it also flushed out the weak hands who were just looking for a quick pump. So the technical context is simple. We are at the bottom of a multi-year consolidation pattern with oversold indicators sitting on critical support. So how am I playing this? I still have my long-term bag of Uniswap. I accumulated this in the low range during the last cycle, and I took profits in the high range. I am not selling my core position here. In fact, I'm accumulating again for the long term. I'm treating this zone around $3 as a prime load zone for the next 12 to 24 months. My targets for this long-term bag are the green circles on the chart: $4.75, $6.40, $8, $11, and eventually the local top at $19. However, I'm extremely disciplined about risk management. For my short-term active trading capital, I'm using $2.70 as my hard invalidation level. If we get a weekly candle close below $2.70, the wedge structure is broken. At that point, I'll wait for an overbought level on the RSI on the 2-hour time frame and open a short hedge targeting the $2 level to protect my long-term exposure. There's no point in eating a 25% drawdown if the floor falls out. But if we hold this level, I'll be trailing my stop loss up. Once we hit the first target at $4.75, I move my stop to entry. If we hit $6.40, I move my stop to target 1. I lock in profit. I do not give it back to the market. So the data is pointing to a massive transfer of wealth. The retail degens are chasing frogs, cats, and dogs on Solana, while the largest institutions in history are quietly building on Uniswap. The price is currently reflecting the retail exodus, not the institutional arrival. In my honest opinion, that gap is a huge opportunity. This is not a get-rich-quick trade. This is an index bet on the future of financial settlement. I'm betting that BlackRock knows what they are doing. If you found value in this breakdown, make sure to like and subscribe. It really helps the algorithm get this data out to more people who need to hear it. Also, I share my daily chart updates and faster analysis in my free Telegram group. The link is in the pinned comment below. If we lose that 270 level, that is the first place I'll be posting the update. And if you want to understand the economics behind this protocol, you need to watch my last video where I break down the fee switch and why that alone could justify a 10x valuation from here. Thanks for watching, stay safe, and I'll see you tomorrow in the next one.